What's up guys, Americana back here with another video. I built one indicator that replaced 6 others on my screen. It combines volatility, momentum, trend structure, and it's completely changed how I'm going to invest. Instead of juggling 3 or 4 signals that often conflict, this model brings them together in one clear, confluence-driven trigger with no guesswork and no clutter. Every trader and investor deals with the exact same problem. Price says one thing, momentum says another, and high time frame trend says the opposite. I built this indicator to fuse them all together. It brings together squeezes, histograms, and multi-time frame trend mapping into one unified model. It feels intuitive to use, but it's also carefully engineered. So let's get into the video. Honestly, guys, I feel bad for you. I did a super in-depth video on this and then looked up and realized I had forgot to hit record. With that being said, I apologize, but the second time around is never as good. And so we are going to do a condensed version, but you guys will see me talk about this indicator probably for the foreseeable future, maybe different iterations of it. But what do we have here? I said a lot in that intro, but there's also a lot in the indicator. I'm not just saying things just to say things. So a little bit of explaining why I built this. What do I want it to accomplish? What is it good for? What's it bad for? Strengths, weaknesses, all that. I wanted something that could do a variety of things, mainly spotting high time frame trend reversals. So tops, bottoms, and confirming when those are in. You guys can see on here, right, we've had some signals. Fire, typically marking when that bear market has set in, and typically marking when the bull market's begun or when the bull market is kind of confirmed to be end. So that is one strength of this indicator, is mapping out those areas that, yeah, I'm not going to get to sell the exact top, but I do know that when this signal does flash, I probably want to think about exiting the market and looking to start accumulating again for the next cycle. The other thing is I wanted it to be able to catch altcoins before they went on their parabolic phases, as close to that parabolic phase or before that parabolic phase as I could, avoiding, you guys have seen on a lot of altcoins, they have these long basing periods. So a basing period is simply when price is basically just trending flat, building a base, right? High time frame is bearish in this area. We kind of go flat and start building this base, and now everything's caught up together to where the low time frame and the high time frame can all move together, and I want to know when that's happening on these coins. So I have Dogecoin pulled up just because I have plenty of historical data, and it tends to have these long basing periods like I've mentioned. But yeah, if you had started scaling into Doge right here, barring the fact that we had this COVID dip and a few blips below and things like that, right? Looking back on this cycle, I would have been very happy that you had scaled into Doge 28,000% early. These levels working on this buy signal that we have here. It doesn't necessarily mean deep into everything immediately. It just means like, hey, we're kind of at a point where this thing could be reversing trend and looking to catch some upside. Looking at this example here, okay, the signal flashed, let's see the exact, in November of 23. And as you can see on that weekly close where it flashed, we've yet to reach those prices since when it left them in November of 23. So pretty good job of catching these things. Now, whether Doge gets a parabolic rally or not isn't something that's bigger than this chart. That's macro, that's our dynamics like Bitcoin dominance, is Bitcoin in a bear market. That's a lot of other things to determine. But when it comes to sniping a good entry, in this bear market and when this thing might be reversing trend, it did a good job of catching that. This also works on anything. Okay, so this works on stocks, this works on crypto, this works on commodities, silver, gold, whatever you want to throw this on. Also any time frame, right? Quarterly, monthly, weekly, 3-day, 8-hour, 4-hour, 1 hour, 15-minute. I think the lowest it goes is 15-minute right now. But it works on all those time frames and it scales down accordingly. It started as a macro idea, so it does work best as a macro indicator, but you can use it for kind of confluence on whatever system you're using for trading if it's lower time frame. Probably wouldn't use it for exact buy signals on the lower time frame. But if you're looking for a buy and you start seeing buy signals flashing around your entry or where you are already positioned or things like that, it can be good confluence to that, hey, this is a strong setup. Or if it's you get sell signals halfway to your TP, then maybe it's like, I'll take 50% off here. Things seem to be cooling down, whatever have you, right? So more so confluence, right? It's not going to be the end all be all, even on weekly and monthly time frames. I more so want to know that, like, hey, once the signal flashes, next 6, 8, 10, 12 months are likely to head in XYZ direction. That's kind of what I want to know with this indicator. So like I said, I already recorded this video once. It's going to be relatively quick, but I'll try to cover it with the same fire that I did the first time. But back to the Bitcoin chart here. So what we have down here is a histogram. This is what maps out our momentum. Okay, it pulls from a variety of things. I think I have it in my notes that we will cover it in this video. But one thing that is super important with this histogram is all of these have slope. These all have slope, rate of change, acceleration, all of these things. And this is calculated and this is used in these buy signals. We cannot have a weak downtrending slope and expect a strong signal. So we want to ignore that. But when we get a strong slope, absolutely, we want to be able to take advantage of that because that seems to be strong momentum or strong trend in one direction or the other. So that's the first thing. The histogram, it's not just momentum, it's rate of change and acceleration. It tracks the slope and curve of momentum so you can spot pivots before price reacts. All right, next thing. Oh, one more thing with the histogram is you also get these sell approaching and buy approaching signals. I forget the exact logic that goes into that. I think it's a certain slope. I believe it's a certain slope or within a certain, not percentage, but maybe ticks or points or whatever this uses. I think it uses points. Within a certain amount of points of that cross within a regime that lines up with that cross. On the higher time frames, you actually can use these for buy signals if you want to get in a little early. So if we look to the weekly time frame here on Bitcoin, our first buy approaching sign actually came in on December 5th. And that buy did not get confirmed until January 16th, which was actually, let's see, this was about 40% higher, right? So on the higher time frames, we can use this, but we don't always get them. That's one thing is, like, I didn't want to a lot of false signals with this. So on the higher time frames, you should respect the signals, but you're also not going to get a lot of them, and you're not guaranteed to get any. This in here, this bear market in here, we had no signals on the weekly anywhere on here. We did get some on the daily, and they actually stacked up very nicely with some other things that we look at, but we didn't get those signals that we were looking for. So you're not always going to get it, but when you do, it is something you should probably listen to when it comes to, like, your outlook over the next coming months, years, not years, but you know what I mean. All right, next up is the high time frame regime logic. That's what you guys are seeing with these gradients in the background. This does a few different things. When we're not getting signals, we can at least tell, hey, we're in a bullish period, hey, potentially bearish period, things like that. Kind of been stuck in that as of late. But you can kind of tell where you're at even when you're not getting signals. And this is pulling from the higher time frame. So this is going to be your EMAs and what goes into looking for that squeeze on the higher time frame. If it's bullish, bearish, your histograms on your higher time frames are going to stack into these regimes on your, what I would call, execution time frame. Right now we're on the weekly chart, so our execution is going to be the weekly chart. These are also important because when we do get these crosses, all, like, my signal can cross up and down on this zero line as many times as it wants. And that's a problem with a lot of indicators that are based on momentum, is you get so many false signals because price tends to chop around in and around that zero line repeatedly. What I want to know, I don't care about crosses and signals until the high time frame aligns, multiple high time frames align with the lower time frames. So yes, that does mean you might catch this signal 40% late, but you should have been buying Bitcoin down here anyways. You should have been buying Bitcoin down here anyways, based on other things. Like I said, this thing doesn't work, purely independently. It can, but you're not guaranteed to get the signals. But if you were somebody who was buying Bitcoin all down in here, and if you guys weren't around for it, we had a US banking crisis on this little wick down. So when we get this wick down, now I can be confident, hey guys, we had this macro buy signal. Bottom is likely in. We are likely on the bear market. This dip is for buying, and this dip's for buying, and this dip's for buying, and this dip's for buying, and this one, and even potentially this one if we don't get one of these sell signals. So that's kind of, an idea of how this is used and things like that, and also what this regime is for. And they all have regimes pulling from different time frames and things like that. And it's always going to put you in a decent idea of like bullish, bearish, or transitional period in the white. All right, so on the execution time frame, we have the high time frame regime. Then we have our execution time frame. We need to see similar things across EMAs, histograms, our squeeze indicators, things like that. We need to see those on the lower time frame match up with those on the higher time frame. That is what is going to give us our signal. So this is the extra layer upon layer upon layer upon layer of confluence that I wanted for these macro structures. Is like, I want to know when the quarterly is aligned with the monthly, which is aligned with a weekly cross, because that's going to be the strongest buy signal, or that's going to be the strongest confirmation. Or when the monthly has lost momentum and the weekly, and we just slip through for a fourth time on the daily at this rate of change. That's when I want to know that trend could be potentially shifting. All right, you guys bear with me a second. I'm going to take off this and add this. So all of these things actually work together. These are three separate indicators, but they pull from the same logic and they actually talk to each other. So what this does or what this divergence that you see up here, just no different than any bearish or bullish divergence. If momentum is higher, or let's say if price is higher but momentum is lower, bearish divergence. If price is lower but momentum is higher, right? Bullish divergence. And it's working off of this histogram, which has a variety of things baked into it. It's never going to be perfect. Again, like I said, with this system, with this signal, with this model, it's not going to be exactly perfect, but you can see on here on the weekly time frame, and these are operating on the closes, so I could tell you exactly where this is going to be at. If you bought Bitcoin at 6,700, if you bought Bitcoin at 5,500, and if you bought Bitcoin literally bottom ticked it, Pico bottom at 3,200, okay, and then you sold at 11, 13, 25, 38, and 57, right? You'd be pretty happy. So yes, these things they might not work independently, or they might not work perfectly when it comes to, hey, I'm going to take a long position at 6,200 targeting 58,000 or 60,000 or whatever. Boom, I got flushed. But when it comes to accumulating your bags over time, it does a pretty good job. And then also just confluences of like, let's say I was on this YouTube channel, back in June of 23 or something like that, and I'm like, hey guys, typically we retest this 21 MA from the underside. It can be a little bit of a fight, be prepared for it, things like that. And we're all through here, and I don't really know when this fight's going to come in. Is it over? Is it going to end this way? How's it going to end? And we get back to this EMA, we retest it and get a bullish divergence. Well, hey, I can come on here and be like, guys, it's likely that we see some price depreciation over the coming weeks, months, whatever have you, with the same idea that, hey, we already got this bullish buy signal and it's likely that we are reversing trend. There's no reason to be macro bearish, but just setting expectations for myself and setting expectations for you guys. This indicator will shine. Not specifically talking to the divergence. I kind of got diverted on that conversation, no pun intended, but you get what I'm saying, right? Building positions, exiting positions, leaving the market, and then typically does when a top is going to come in, it is going to top ticket. Go ahead and look on the monthly. This one is super interesting to me. Nailed this top to the month, this top to the month, and this bottom to the month. I believe I mentioned this in the video that I so dumbly recorded without recording earlier. But if we're looking at Bitcoin's price action, right, what I'm showing you guys here is not the full capability of this thing, right? There's a lot of stuff I can go to when just looking at what the histogram is doing within regime, or what these things are doing, or what comparing multiple time frames together. So there's a lot that this can actually do outside of just these basic buy and sell signals, this potentially being one of them. We'll just go through a quick exercise on what I thought was interesting when I saw this chart, right? Is, hey, we're on the monthly time frame. We don't have data for these past cycles for my histogram, just because there wasn't enough previous data. But hey, we can see it has marked the last two tops and one of the last bottoms. And on the daily time frame, there was a divergence there as well, as you guys saw. Same with like weekly and daily here as well. But my point is, if you are somebody who says, hey, Americana's indicator hasn't flashed a bearish divergence, it's happened the last two times, it's going to have to happen again for the top to come in. All our other videos are on this week are about potentially this and what's going to happen around 110 or on a bounce or something like that, but just completely ignoring that. And you said, hey, what am I trying to say? Oh, I got to pull up the histogram for this part too, right? So we've had, right, this histogram increasing, right, as we have seen in past cycles as well. When this has topped out, right, its first month where it has closed at a decrease, that has typically meant the top is in. And when it closes at this decrease, like we just talked about, it's closing at a higher price with a lower momentum. This is the definition of how we get this divergence. So if we're looking to this cycle, oh, what did I just lock? So when we're looking to this cycle, again, this month just opened today or yesterday, so you can kind of ignore this. But my point is, right, if we think it has to end in a bullish or a bearish divergence, what would we need to see this month or in 2 months or in the coming months? Is price actually would have to make a new high and cause some sort of divergence on lower momentum. So you can use it in kind of creative ways like that. That's just an example. I'm not personally betting the entire cycle on us having to get a bearish divergence. Let's say we do reclaim 110, something like that, blah, blah, blah. And we pump to, that's way too high. Just pretend I drew that at like 150, and then we get this divergence to show up in here. Well, yeah, I'll likely be exiting, not gonna fade that signal. So that's how the divergences work. All right, I'm not going to show or talk about everything that goes into the back end of this, but I did mention some of those squeeze dynamics. I do think it's fair for you guys to know what the hell you're looking at. So what goes into it, or what goes into the histogram? A lot of things, momentum-based stuff, EMAs, where things are trading at in relation to their EMAs and across multiple time frames, and then also the squeeze dynamic of it. So what am I using for the squeeze side of things is Bollinger Bands and Keltner channels. Haven't heard about that one in a long time, but I was advised to give it a try for this indicator, and it seems to be working well. Bollinger Bands and Keltner channels for our squeezes. And you guys know how Bollinger Bands work, right? With squeeze, 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 and price is going to expand one way or the other, up or down. So if we know that it is squeezing and we have an idea of the broader regime and the lower time frame momentum in its direction, maybe we can catch a violent move in one direction or the other is kind of the thinking behind that. And there's a lot of other filters on here. I think I mentioned, right, we have allowed slope, or sorry, not allowed slope, but rate of change of the slope on the histogram and a few other things as well. So I apologize, this was a shorter video. One more thing to cover, it sounds fancy, normalized output. All that means is like when I change time frames on the chart, that this will then go and change the regimes, the histograms that are needed to be changed on the back end, all different types of stuff. Let's see here. Looks like today or yesterday, even with this 5% decline in Bitcoin, we had worked on flipping our regime green. Looks like we're currently flipping, so we will monitor. Momentum seems to be squeezing as well. No signals yet. Don't really know why I'm saying this when I'm talking about normalized output. But yeah, I think that's kind of it. We will have plenty of time to talk about this more and more. I think this thing really shines when we throw it on some of my custom charts that kind of require momentum, because how the hell am I going to chart ratio that just bounces and pings back and forth? Well, if I do look at the momentum, things tend to line up. We cover this in a video this week, but it also shines there. So we will definitely be leaning on this heavily for the foreseeable future. So make sure you guys get acquainted. If you guys have questions on this, definitely let me know. Super sorry that I could not record this right the first time. That one was much more in depth, much better energy. But like I said, we'll be revisiting this topic over the coming months and things like that. So anyways, guys, I will see you guys in the next video. If you guys have questions, let me know. Free stuff in my bio, free Discord, free materials, whatever have you. Anyways, I'll catch you guys in the next one. Peace.